Welcome back to Investing Talk Podcast. Today we're looking at a company that's really reinvented itself, American Superconductor. It's shifted pretty dramatically, hasn't it? From being maybe a niche power tech supplier to, well, now it's right in the thick of the AI and infrastructure boom. So our focus today is pretty tight. Quick look at recent financials, technical health, and what's coming up. Future catalysts. We're trying to answer that big question everyone seems to be asking. Is American Superconductor a good buy now? And hey, before we jump in, if you find this analysis useful, please do subscribe, like it, maybe leave a comment. Seriously, we mean it. If there's a company you want us to dig into next time, let us know in the comments. Drop the ticker symbol.
Yeah, this look at American Superconductor is really timely because the whole story around them has just done a complete 180. Historically, they were mostly known for utility stuff, wind power components, but the numbers we're seeing lately, they reflect a successful, pretty fundamental shift. They're moving into specialized power infrastructure, stuff that's absolutely needed for these huge data centers for AI computing. It's shown, frankly, explosive growth in the past year. So yeah, critical stock to analyze for anyone watching infrastructure tech.
Okay, let's unpack that. The first thing that jumps out in the sources is just the phenomenal run the stock's had. I mean, up fivefold year to date, trading around $60.84 now. It's blown through its 52-week range. That's just massive positive momentum. So what actually drove that? All that excitement, that buying volume, say, in the last 3 to 6 months?
Right, and this is where it gets really interesting because that rally, it isn't just hype, The foundation is solid financial execution, and it's tied directly to that strategic pivot you mentioned. It really started gaining traction after they acquired NWL. That deal gave them the high power density solutions the AI sector is crying out for, and we saw the proof almost immediately. Look at the Q1 results for their fiscal 2025, reported back in July. Revenue jumped, get this, 80% year over year, $72.4 million. And crucially, it wasn't just top-line growth. They actually swung to a net income of $6.7 million, reversed prior losses. That signals a real shift into reliable profitability.
Wow, 80% is huge. But you mentioned the NWL acquisition. How much of that 80% jump is like just integrating NWL versus actual organic growth in their older segments? Are we seeing real sustainable change here, or is it more of a one-off boost from the acquisition?
That's a really good question. And yeah, NWL definitely provided immediate lift, expanded the product line. But the structural change, you see that in the profitability. They're keeping gross margins steady, around 29%. Debt is super low. Look at the trailing 12 months revenue, hit $254.89 million. That's over 100% year-on-year growth. And that translated to TTM net income of $15.28 million. So about 0.39 EPS. The key thing is that acquisition wasn't just about buying revenue. It was strategic. It was about accelerating their entry into that data center space. And now it's paying off, both revenue and bottom line.
Okay, that sustained profit and low debt, that gives them options, flexibility. And you mentioned they've beaten estimates, both EPS and revenue, for 4 straight quarters. Consistently, what specific move or maybe management decision do the sources credit for that reliability, for delivering better than expected?
Well, the sources point to management's really aggressive focus on the power resilience market. They saw the huge need for specialized power solutions, stabilizing the grid. And then, this was critical, they realized that same tech could be adapted, scaled for the very demanding high-density power needs of hyperscale data centers. That sharp focus, which the NWL tech helps enable, let them deliver predictable results, even in a sector that can be pretty volatile.
Okay, that financial story sounds rock solid. It definitely validates the past year's performance, but investing, it's always about what's next, right? The future. So let's shift from proven execution to, well, the catalysts on the horizon. Speculation. What known measurable things are coming up, say, in the next 3 months, that could push the price even higher than $60?
Yeah, connecting the dots here. Investor attention seems really focused on 2 kinds of things coming up. There are the fixed calendar dates, and then there's the rumor mill, the high-impact speculation. Okay, the main fixed date everyone's watching is the Q2 fiscal 2025 earnings report. Expected maybe late October, could slip into late November. Consensus forecast is looking for about $0.15 EPS on sales of $67.85 million. But honestly, the exact numbers aren't the only thing. You really need to listen to the management commentary on the earnings call, especially about new order flows, because their business is project-based, right? So getting clarity on signed contracts, especially big ones from government, utilities, or data centers that'll be watched like a hawk, could definitely trigger a big move.
And what about just market mechanics? Sometimes things like fund rebalancing or institutional buying can create their own momentum, right?
Absolutely. And there are 2 dates the sources flagged for that kind of market flow activity. October 15th, that's an industry ETF rebalancing date. Since American Superconductor is now a pretty significant growth name in some infrastructure and tech ETFs, managers will be adjusting their holdings. Then, around December 1st, there's a major institutional ownership disclosure date. If those filings show big funds kept buying aggressively, a sign of real conviction that can boost liquidity and potentially push the share price up.
Okay, so fixed states, market flows. But beyond that, the sources keep mentioning this persistent market buzz, rumors. With a stock that's already run up fivefold, you have to wonder how much speculation is already baked into that $60 price. What are the big, high-impact rumors floating around that could actually act as triggers for, sudden upside?
And that raises the valuation question, doesn't it? If these rumors actually pan out, suddenly the current price might not look so expensive. Okay, first, there's ongoing, pretty heavy speculation about landing more large-scale U.S. Navy contracts. These are for naval power resilience projects, basically protecting power on ships. Very important stuff. These deals are often multi-million-dollar, multi-year contracts. That means fantastic long-term revenue visibility, which the market absolutely loves. Second, policy. You always have to watch policy tailwinds. There's constant chatter about potential federal infrastructure money, specifically aimed at smart grid tech, grid hardening. And because American Superconductor has really specialized products here, they could benefit disproportionately if that funding comes through.
And what about that key data center pivot they made? Is there a big rumor connected to that?
Yes, and that's probably the highest impact speculative catalyst out there right now. There's strong market buzz about a potential major partnership with a large hyperscale data center operator for their next-gen power supply solutions. If they land a marquee name there, wow. It's not just a contract. It'd be like getting the gold seal of approval on their whole AI power strategy. It validates their tech for literally the fastest growing sector on Earth. And finally, there's even some talk about potential M&A. Maybe American Superconductor itself doing some deals to expand further into advanced renewables.
That's a pretty compelling list of potential good news, layered on top of already strong financials. But let's be real, that massive run-up 5 times this year alone. Is the stock looking technically overbought? Is this momentum healthy, or should you be bracing for a serious pullback?
Well, what's fascinating, technically speaking, is that even with that huge price jump, the momentum still looks solidly bullish, and without the classic signs of overheating, which suggests maybe that the buying has been disciplined, perhaps more institutional money accumulating positions rather than just, retail FOMO chasing the price. The main technical evidence, trend confirmation. The price is still comfortably above both key moving averages. The 50-day simple moving average is down at $52.41. The longer-term 200-day SMA, way down at $32.72. That confirms the uptrend has pretty strong structural support underneath it.
Yeah, usually when a stock goes 5x in under a year, I'd expect the RSI, the Relative Strength Index, to be screaming overbought, way above 70. What are the sources saying about the RSI level now?
You'd think so, absolutely. But here's the surprise. The RSI is currently hovering right around 50.20, just about neutral. Now remember, RSI usually signals overbought above 70, so being near 50 after such a dramatic climb, it suggests the accumulation has been, well, smoother, more gradual. Indicate surprisingly healthy momentum. None of that froth you usually see before a sharp correction. So technically, this gives the stock room to potentially run further without hitting immediate selling pressure just based on momentum. You just need to keep an eye on that key resistance zone, roughly $65.31 up to $65.70. If it breaks cleanly above that, that could kick off the next leg up.
Okay, so technically maybe not as stretched as you'd first think. What about the broader market view? What's the analyst consensus? Are the big money funds actually buying in?
Analysts are definitely bullish. The consensus rating is a firm, strong buy. The average 12-month price target is around $63. So modest upside from here based on averages. However, the high-end estimates go up to $73. And that lines up perfectly with what could happen if one of those big defense or data center rumors actually hits, and crucially, institutional ownership. It's been steadily increasing all through 2025. That backs up what we're seeing in the technicals suggests accumulation.
All right, we have to talk about the flip side now. Risk. When you're looking at a growth stock that's already up 500%, you're inherently looking at risk. What's the single biggest, most immediate risk factor you need to understand here?
You absolutely have to understand the volatility. It's the most striking financial risk factor. The stock's beta is 2.89. That is exceptionally high. The market average is 1.0. This is nearly triple that.
Okay, let's just quickly break that down for listeners. A beta of 2.89. If the S&P 500 moves 1% up or down on a given day, what does that practically mean for this stock?
It means, theoretically, if the overall market moves 1%, This stock is expected to move almost 3% in the same direction. It dramatically magnifies gains in a rising market, but it also magnifies losses in a falling market. So when the market inevitably pulls back, you should expect American Superconductor to pull back much harder, much faster. That's baked in. And there are other operational risks too, of course. Heavy customer concentration is one. Relying on a few large utility or government contracts means losing just one could really hurt the revenue forecast. Plus, there's always the risk that their R&D doesn't keep pace. The tech in the AI power space is moving incredibly fast. They have to stay innovative.
Okay, so pulling it all together, what does this all mean for you, the listener? Let's synthesize this, bring it home. What's the investment thesis here?
Well, the overall outlook from the sources is clearly highly bullish. It gets a very high rating based on what we've seen. That bullishness comes from that successful strategic pivot, which is now validated by explosive revenue growth. Add in solid operational execution, those consistent earnings beats, and then layer on all those potential near-term catalysts in really hot sectors.
And the sources seem to suggest it could appeal to different types of investors, right?
Exactly. For shorter-term traders, it looks interesting ahead of Q2 earnings, maybe playing potential contract news. But it also looks structurally well-positioned for the long term to capture those massive secular trends, grid modernization, renewables, AI infrastructure build-out.
The story is compelling, financials look strong, technicals seem okay for now.
But, and it's a big but, we keep circling back to that huge beta, 2.89. Yes, it suggests amplified returns if things go right, but it absolutely guarantees amplified losses when the market turns choppy. So here's the final thought for you. If the positive outlook really depends heavily on landing these big, sometimes unpredictable government or utility contracts, what specific risk mitigation strategies should you use for position sizing? Given that high volatility is basically guaranteed, how do you structure your investment? How do you participate in that potential upside while still protecting your portfolio from those inevitable sharp swings? That high beta, that's the homework you need to do before putting capital into this very impressive but very volatile growth story.